Well, let's take the conversation forward. Fook Hien, senior investment strategist at Standard Chartered Bank, is with us. Fook, great to have you with us. So, I just want to focus exactly on this, on how you're looking at a market like India now, because it's been underperforming, the currency has been under pressure as well, and that trade deal is still elusive. But do you think the worst is already factored in the way prices are shaping up here in India? Or could there be further downsides?
Yeah, hi. Morning. Good to be here. Thanks for having me. I mean, yeah, we do get a lot of questions about India from clients asking, is it a good time now? It's pulled back. Is it a good opportunity to add aggressively? Look, I think we are looking at it as a core holding. We think it is good for the medium term. But in the short term, the headwinds, sure, you have tariffs, but I think we all know that for the equity index, sales in the US is just about 8%. So India's the revenue and earnings is very much domestically focused. So the direct impact is not so great, actually, in terms of the sales in the US. And even then, a lot of its IT services, pharma, which is exempted from tariffs at the moment. So it could affect sentiment in terms of the headlines that we're getting. It could affect currency volatility. It affects the risk sentiment there. But fundamentally, the tariff impact, in terms of the direct impact, is not so much of a concern. But what is more of a concern we see actually is the earnings revision. And earnings revision actually has been negative. And we saw that post-earnings season, it is still negative. And for a growth market like India with a high valuation, we think that we really need to see earnings momentum pick up and earnings revision turn positive. In order for flows to come back in there. So we do still like, I think, the medium-term story, and the earnings growth is still at very high levels, I think mid to low teens at the moment. So it is still good on an absolute basis. It's just that the momentum is still a bit weak in the near term. So what we are saying actually to a lot of clients, investors, is that it is good to accumulate for the long term, but in the near term, because of this, I think you don't have to be aggressive in terms of accumulating it. It is a core holding for us within Asia. And the preference at the moment we have within Asia is with China and Korea, where valuations are a bit more attractive. And so that is our preference at the moment within Asia ex-Japan.
So you prefer China and Korea to India right now, but India you believe is part of your core holdings and you would like to accumulate at current levels, and the momentum is not on the side of the bulls for India. But what about, the markers that you're watching out for that may perhaps turn the momentum and make you a little more attracted to India versus, say, something like a China or Korea?
Yeah, I think the markers, the key one really would be earnings revision. I think we see that valuation has come down, and it is off its peak, but compared to the 10-year average, for instance, it is still above the average. So valuation hasn't really come back yet. But look, I think in the past, we've seen India being at high valuation and still being able to perform well. And it's really because of the earnings story. And we think that, the tax cuts that has been trying to implement by Modi and the government, that is supportive for consumption. But we're not seeing that flow through yet in terms of the earnings. So I think it's really back to earnings revision. That's the key thing that we see. On a relative basis as well, of course, with China and Korea, those markets have been doing well recently and this year. And I think that a lot of it is because of the valuation. It is still cheap. And then the catalyst in terms of the AI investments and what they are doing with DeepSeek previously, that really spurred a re-rating in China. So in China, it's a re-rating of the valuation, really, from the AI developments and policy stimulus. And then in Korea, it has done very well, but we still see more to come. I think the government there with the KOSPI 5,000 target, then the improvements in corporate governance. So again, valuation is still cheap there at a big discount. So on a relative basis, we still see a bit more momentum for these two markets relative to India. But India is something we watch very closely because the medium-term story is great, but it's just getting the short-term headwinds. Once we see earnings revision turn positive, I think that would be a good time to get in there.
Okay, all right, Fook, we'll leave it on that note. Shorter conversation today, but thank you very much for giving that important view on how you're looking at India amidst some of the other regional markets as well. Thanks for joining in.